All right, welcome back to another episode of Exploring the Process. We've got return guests here, first time ever, actually, Chase. So, welcome back. We got Chase Rivet back here. We're going to get a little bit more into kind of the drivers of the items and like kind of some of his technical analysis that drive the decision of his execution. So he's going to kind of pop into some of his charts and share those. He's been doing that on Twitter quite often. So you'll definitely take a look at his feed, and then we'll obviously be reviewing things today. But welcome back, Chase. Thanks for doing this. Chris unfortunately couldn't join us. We're recording this on a Sunday morning. That's how much we love you guys, right? Hedgeye Nation, Sunday morning with a little coffee and that kind of thing. So welcome back, my friend.
Of course. Thank you guys for having me. It's
absolutely.
Pleasure to kind of get some of these thoughts out.
I love it. I know, last time we were definitely a little bit more philosophical. I think now we're going to dive into a bit of the nuts and bolts of what makes you tick and how you execute those decisions. So really excited. I think I've been loving, so keep it up, because I've been loving the charts that you've been sharing on the, most mornings and throughout the day. It's really helpful. So I appreciate that, my friend.
Of course, no problem at all. I enjoy doing it. I did something like that before, Hedgeye, but nothing, of course, is detailed. So it's just kind of a roadmap to keep me focused throughout the day. And if it helps, others, then all power to us. There's enough money out there for all of us, Yeah,
100%. And I think, I know, I have the pleasure of speaking to a number of folks on Hedgeye Nation, and technical analysis definitely is probably one of the most common kind of like add-on components of making a decision. So I think we're going to get a lot of hopefully a lot of feedback, and I'm very hopeful it's going to kind of keep sparking conversation, right, and keep sparking even, again, not that you need improvement, Chase, but just improving everybody's process. So it should be a lot of fun. And I think whenever, if you want to dive into the charts, or do you want to kind of dive into some of the background as to like how you got started on technical analysis or some of that kind of thing?
Yeah, I think if we start on the background, because what you're going to see whenever I do go into the charts is a combination of things, and that comes from kind of figuring out what does work and what doesn't work. And I think the most important thing is to find a TA or some kind of strategy that's going to work with, like we were talking about earlier, time frame. So I'm kind of larger time frame because I do work. So I trade daily in 4-hour zones or demand zones, whatever you want to call them. Because I have a pretty large amount of time before I have to make another decision. Right, 4 hours to a day it allows me to, just see how it's acting and the character of the stock and whatnot. So just throwing that out there. I mean, if you're going to be a day trader, intraday guy, you're probably going to want to, trade 4 hour, 1 hour, or whatever.
Yeah, it makes sense. I know, some of the videos that we've been doing with Chris, he'll take even some of his, time frame blocks, right, and he'll do the daily, but then shrink it down to the 1 hour, 4 hour, whatever, just to get different time zones. So, that makes perfect sense. And so how does it, so when you're looking at kind of the daily range, will you ever kind of zoom out to like weekly even as well? Well, you just had it on weekly. So
yep. Whenever, okay. So whenever we can even do this, look, I'll show you how I mark something up from top to bottom. What I try to do whenever I mark something up is I go from the monthly all the way down to 1 hour.
Sure.
And the reason for that is like we know, price is fractal.
Yep.
So we're going to be seeing all these patterns replay out on a lower time frame. Right? I mean, you're basically seeing, like, the best way I can explain it is price is almost like a car antenna that's always extending itself. You know what I mean? It's always whatever, it's how much of a liquidity is behind it is going to be, repeating itself over and over again on lower time frames. And so I look for, say, what I'll do is I'll start on the monthly time frame, and my strategy is it's basically a mix between market structure and supply and demand.
Okay.
So what I'll do is I'll look for, this, to me, this is a supply zone, right?
Mm-hmm.
On the monthly time frame, because we have an imbalance here.
Mm-hmm.
So as you can see, we have a stream of red candles,
Mm-hmm.
one green beforehand. This is where the orders are. This green candle is where your resistance is.
Okay. And
So,
you've seen that, and you saw that play out.
Yeah, just
later,
from back testing. Yeah. So, I mean, I've seen this play out I won't say millions, but thousands of times over the course of back testing. I mean, you're just gonna have to get comfortable with doing it yourself. I mean, that's the only reason I'm comfortable even using this, because I have seen it play out so many times.
Sure.
But I mean, there's plenty examples. Look, this is a demand right here.
Yep.
So the last red candle before a stream of green.
Mm-hmm.
Yeah. And basically, I mean, this is pretty elementary, simple stuff, but if you start by marking up the larger time frames and then working your way down, what you'll start to find is, hey, look, I've got a supply zone right here,
Mm-hmm.
within that monthly supply zone that kind of pinpoints where I'm looking at.
Sure.
You see, I mean, it just gets smaller and smaller. So when I realized this, things kind of started to click for me. You see?
Yep.
Boom.
That's interesting.
Yeah. So like we speak about, price is fractal, to where, these patterns repeat themselves, over and over again. It just depends on where you're looking at. I mean, or how you're seeing, price.
Yeah. So then how do you kind of start? Because again, right now, deep quad 4 expectation would be for the dollar to keep moving higher, right? And to be an asset you want to gain, have exposure to, and it certainly has worked, and you can see that from the candles if you hover over just from the beginning of the year, let alone middle of last year, right? I mean, it's been obviously a huge run from June of 2021, right, all the way up to now kind of early April of 2022, but we're kind of going into that supply zone, right, where the demand, again, just like from this analysis, so would you be expecting basically it to be a little bit choppier here for the dollar, right? Not quite as much upside.
Well, I think a good thing to look at. So, for instance, if we're going to talk about currencies, let's look at. So this whole thing is a range right here, right? You see this big swing.
Yep.
Okay. So institutional guys. I mean, I'm not sure if y'all ever use this, but institutional guys, some big traders will think of the 50% fib as premium or discount, wherever your swing high or swing low is.
Sure.
For instance, whenever you get above this 50% up here is, they call it premium, right? Okay. You're paying a premium for this asset. So the higher it gets within that 50% of your swing high and swing low, right? So the more it gets into this area, the more sales are going to be prevalent. So that's just some basic, I mean, that's how I think about swing highs and swing lows. So whenever I see price or an asset getting up to the top half of that swing high, swing low, then I'll start looking for confluences to say, hey, maybe we could see some choppiness. Now, I actually looked at this this weekend, Chris. I'm sorry, Robbie, is that if you look at all of the other currencies, like this is the euro.
It's almost the opposite.
Yep, this is the euro. But what you're noticing is on the euro is that what are we hitting here?
Yeah,
a demand zone, right? It's getting close to these lows. So, I mean, the dollar's close to its highs. All the other currencies are close to its lows. So, what I would expect is some kind of correlation to where maybe you get a breach. and then price comes back up.
Mm-hmm.
And, you know, if we were to do that on the dollar, it would look, you know, breach back down.
Right.
And what does this look like?
Yeah, pretty much. Yeah, pretty much exactly what it's done the last 5 years, right? Yeah, 4 years.
It could very well happen. I mean, you know, let's look at the pound. The pound is I got some scribble scratch on here, but let's look at the pound. I mean, the pound looks like it's in a bottoming process as well, doesn't it?
Yeah.
I mean, we've got, you know, another demand right here. Price showing you that, you know, we're getting to the lower end of this whole impulse right here, this big impulse.
Yep.
So I would expect some selling to come within the dollar, but I'm not gonna you know, I'm gonna trade whatever the dollar's telling me to do. I'm not gonna just start shorting it, you know.
Yeah, I think that's a great commentary, something that I'd love to dive into more, right? So it's like, you know, we obviously from Hedge Eye subs and kind of like, you know, we follow the fractal math, right? And the data, the data drives a lot of our decision making. So then when you're overlaying this technical analysis, how do you sort of try to combine the two?
Yeah, so for the dollar, like that's a good question, because you gotta wait for the market to confirm your bias.
Right.
Right. For instance, if I was gonna go short the dollar, I'd want you know, of course, I'd want my underlying conditions to be like to favor that.
Sure.
Right now we're not in that. I mean, we're in quad 4 and uncertainty is kind of high. So I mean, the dollar is where people run, you know, for safety and defensiveness. Yep. But if I were to do that, I would want to see you know, basic underlying conditions saying, hey, you know, the dollar is unfavorable here. So that gives me a little confidence. And then I'd also want to see, you know, a technical signal saying, all right, you know, price is starting to break down here. It's kind of acting weak.
Sure.
Kind of acting weak. I'm starting to get some rejections here, rejections here, rejections here.
Got it.
And then what I'll start to see is I'll wait for price to confirm my bias. So we'll get a break here. And then like kind of what I did on NASDAQ, I'll wait for a retracement.
Mm-hmm.
And that'll be, you know, where I look to enter. So I guess what I'm saying is,
yeah,
you know, you can have a bias all you want, but if price isn't showing you that bias or showing you that you're right, then you pretty much got to sit on your hands. I mean, like for instance, with oil, you know, I know that we're slowing. I know that this SPR release is coming, and I understand that you know, it's a big deal for inflation. But also, I haven't seen price, you know, break where I needed to break in order for me to get short on oil. You know, and I'm a strong believer that if you're not long, you should be short. You see what I'm saying? So it's just one of those things where I'm waiting for price to confirm what the narrative or what the numbers say.
Sure. Yeah, it just goes back to kind of one of my core beliefs, which is patience. Patience is a key driver of the process, right? And if you don't have the patience to sit on your hands or to wait to let something confirm, then you're likely going to get definitely chopped up, especially in the chop bucket.
Oh yeah. I mean, look, what is the VIX at right now? 18 or what's the VIX at? Hold on.
I think
21.
21, yeah.
Man, what's it going to look like when it goes back to 28? I mean, 30. I mean,
exactly.
I mean, U.S. equity, I don't know, man. I'm just, you know, if anybody follows me on Twitter, you know that I'm still long energy and I'm still long PMs and, you know, uranium. And I know it's risky. I know basic underlying conditions are essentially saying, you know, we're going into a disinflationary slowdown. But I just want to, you know, point out a couple things, and we can even go through this on the charts.
Yeah, let's do it.
So I want to look at, let's look at XLE, right? So as we can see, XLE doesn't look like oil.
No.
You know what I'm saying? XLE, even on down days for oil, XLE is ripping, right? We're not having any down days for oil equities.
Yep.
And I believe that's bullish for me. That's bullish signals for me. Like, even if we go into oil, right, as you can see, we're in a consolidation for oil. The equities don't need oil to go any higher for them to make money.
Mm-hmm.
So I think there's a distinction here that people aren't realizing, is that even at $80 oil, even at $75 oil, some of these companies are going to be profitable.
Yep.
And that could be why, every cycle isn't like this. Every cycle is particular to itself. And I think that, like, conversely, while treasuries, like, where's all the money coming from that's supposed to go into treasuries? Where is that going? You know what I mean? That's got to go somewhere.
Yeah,
So,
and I think, again, especially with XLE, it's made up of a number of larger companies that produce dividends, right? So not only are you getting some growth factors, but you're also getting some dividend factors as well. And I think that's if you look at, just dividend as a style factor in general, it's certainly been a big time outperformer this year. And, folks are kind of looking for yield, but they can't find it in the TLT right now, or they can, I guess, but it keeps going lower on them. So it's definitely an interesting underlying dynamic that you got to kind of keep in mind.
Yeah. And if we were talking about this earlier, if you look at all the sectors, just look at utilities.
Yeah.
Utilities. People are hiding. Real estate. People are hiding in, these consumer staples. People are hiding in these defensive stocks.
Yep.
So people are hiding in these stocks. But what's interesting to me is that, TLT, the 20-year treasury or the 10-year treasury. Ooh, look at this. Y'all should be happy about it. Y'all should be happy about this, Robbie.
That's right.
Look, we own it now, buddy. But so what I'm saying is, this money, this TLT has been the safe haven asset, or the 10-year has really been the safe haven asset for like the past, couple decades.
Mm-hmm.
So, the question is, are people going to continue to buy our treasuries with the yield the way it is? You know what I mean? You're basically guaranteeing me a 2% return on 10 years of my money on the TNX. So I guess what I'm trying to say is that it's going to be interesting to see where everybody hides from, this equity crash if we're not going to treasuries. It's just going to, that's why I think gold and silver is going to just tear the roof off, because, where are people going to hide?
Yeah. And so I got a question here on the TLT, right? So if we go overlay this, so this looks like a demand imbalance, right? So you got basically, historically going all the way back to 2019, you've got kind of like a buy zone here, right?
That's right.
But just similar to like late 2018, which is when, this kind of current period certainly has been discussed a lot about in terms of, when it was, most right, like kind of, history, looking back at history would be that late 2018 going into early 2019. Mm-hmm. So if you zoom out a little bit further, what did those zones look like? Yeah, kind of going back, 3-5 years prior to like 2018. So again, basically a similar spot, right? You basically had, again, I'm just visualizing it on the map, or sorry, on the not on the map, on the chart, which becomes a map, but I guess at the end of the day, right, Chase? So, but yeah, you can see, again, I can just visualize it right now. You can see that buy zone was right. Yeah, it was like right there.
Yeah, you'll see this over and over again, my friend. If you
And you
you
even had
know,
another one. You even had another one that would have kind of sucked people in, but it gave that first pop like just above it, right? Like you kind of can see there's another sort of like level there. Yeah, exactly.
what's funny, Robbie, is that look how long it took for the move to actually play out here.
Yeah.
And why did they do that? It's because all of these guys got used as liquidity here.
Right. Yeah.
You see what I'm saying?
Yeah.
All
Yeah.
these guys right here, they put all their stops right here. You see?
Yeah.
But
That's so funny.
so whenever you have some kind of whenever you have a consolidation like this, and you see it's like a perfect little consolidation, it's like, all right, this thing's definitely going up.
Yeah. Yeah.
Just a word of advice to anybody who will like to back test: wait for a breakout to either side. Like, so if you have a consolidation within this range, right, and you want to go long, wait for a dip and then go long here,
Yeah. Which
right? Because everybody's stops just got hit here.
yeah. Yeah.
You see what I'm saying?
Yeah. Yeah. Which is basically what drove going into like, the quote unquote bottom there in 2018. You wanted to buy, it's exactly, you wanted to buy on that red excuse me, on that red candle. um yeah, like, they confirmed or went up, went down again, and then it was that next move higher excuse me, that you really wanted to, that's when you wanted to jump in basically, and you could have done
Yeah.
it again, and you could have done it again a month later, right? That next big red candle down, kind of halfway through. um yeah, I mean, it's funny how the market always gives you multiple chances, right? Kind of seeing it in gold right now. Well, you just saw it, it been trading, it'd been consolidating for the last month, and then just sort of coiled higher on Friday. So
Yeah.
that's so interesting though, Chase.
Yeah. I mean, this is why I kind of I like to use my own strategy because, like you said, it's a roadmap. And, you know, I mean, the risk ranges, I'm not saying that they don't work, because they do. I've definitely seen them, personally work. But I do believe that they are a good confluence to, if you have your own like strategy. For instance, when he said, my risk range on TLT is 125, 127 or whatever, I knew that I was in the right area, right? I knew that at 125 around here is in the right area because his risk ranges are confirming that for me.
Yep.
You see? So if his risk ranges are built on price volume volatility, and it's also in direct line with my demand zones, that gives me a little bit more confidence.
For sure.
Now, I'll show you how I would risk manage this, right? Because I think some people are having. Didn't we talk about some people are kind of like wondering about how do you, scale into a position? How do you scale out?
Definitely.
Um, this is what I do personally. So I've split my position into quarters. For instance, so whenever price is around this area and it's slowly coming to your zone, and you're going to have a opportunity to buy, what
Mm-hmm.
I'll do is I'll split like I said, my position into quarters, and then
Okay.
I'll wait. I'll wait for price to hit one of these lines or my demand zone or whatever,
Okay.
and then I'll do a quarter. Let a quarter go. Now, if price continues to go down,
Mm-hmm.
I will not add.
Okay.
you know, I will not add. If it continues to go further like this, some people will add and bring their cost bases down.
Sure.
That's not, I don't think that's how to do this. That's how a small loser becomes a big loser.
Sure.
Okay. So you really need to think that, your small loser could become a bigger loser. And you also need to think that your small win could become a bigger win.
Yep.
Right. So now if price gives me another you know, a little wick right here and then shoots up, I'll add another one right here. I'll add another quarter. And if price goes up again, I'll add another quarter. Right?
Yep.
This way, if it goes up again, yeah. So this way, if you do it like that, you'll always get your money in good with a winner, but you'll never risk a lot with a loser. Does that make sense?
Yep, 100%.
Okay.
Yep.
I mean, that's just how I think about it. I've definitely done the opposite as well, many times. So.
I think we all have, Chase, right? Like, if you haven't, you probably haven't been living. So
or trading.
Yeah, or trading. Yeah, exactly. And so you just switched to gold. So you're in gold here. Yeah, got it.
Mm-hmm. Yeah. So, I mean, it's hard because you want to get your money in good, and you've been waiting on a position for so long, it finally gets there, and you don't want to nibble away.
Totally.
You want to get big because you've been waiting for it.
Completely. Yeah. So I'm glad you switched to gold, because I think gold in the last month gave you multiple different chances to scale up, right, and get that back. So it obviously had a big run, so you could take advantage of the move, going from late 2021 and really almost all of it. Yeah. Anyway, the point is, it's had a big move, obviously, over the last 2 years, but certainly in the last year, it sort of traded sideways and gave you different opportunities to scale in. So you zoomed out to the weekly, is that right?
Just yeah.
Okay. Yeah. So you got the weekly here. And so how did you, again, I mean, obviously in 2020, 2021, we had a multiple kind of quad threes, but then it doesn't work in quad two. And now we're going back in a quad four environment. So like, out of curiosity, I know you're kind of a gold bug at heart, or but so I know this is certainly one that you're constantly keeping an eye on. So like, how did you trade it throughout the various quads and that kind of thing, in conjunction with your own analysis? And Chase, I think it's one of the reasons why we started this is to review each person's unique process, right, and kind of how they take the kind of core data from Hedgeye and then apply it to their own investment mandate, right, and kind of investing process, et cetera, et cetera. So this is awesome, getting into the nitty gritty and kind of seeing how your brain works and how your sausage is made. So thank you again for sharing this. This is wonderful. So like going back to my question about the like rotating out of the quads. Out of curiosity, like you must have been salivating in the spring of 2020, 2 years ago.
Man, I tell you, gold owes me some money. Gold owes me some money, Robbie, because I mean, I haven't always had success trading gold at all. I mean, I got into gold. Look, you want me to show you where I got into gold last year? Right here. Got in right here. And I found Keith possibly right here.
Got it.
Like, I found Keith whenever he was chirping gold bugs.
I love it.
For being long, in quad two. I got in around the top.
All right.
And so this just goes to show you how, I had the technicals beforehand, but I didn't know where the puck was going.
Sure. Right? Sure.
So, I mean, it takes all of it. It takes it. Like you said,
you got to combine it all. Yeah.
Yeah, you got to put the quantitative in with the technical. I think the technical really just is a time and place deal. Like, the technicals really just tell you when and where to get out.
Yep.
So I guess my transition to trading gold, because it does have a special place in my heart, not because I want to see everything burn to the ground, but because I do believe that in order for us as a world to get better, you kind of got to restart a bit.
Sure.
Now, how much pain and suffering that brings is hopefully minuscule, but I want to point out a couple of things. Is that,
please,
you see how we have almost somewhat of a double top here. Okay. So above here, like we were talking about before, that's awful. Like we were talking about before, they have money up here.
Yep.
They got stops above these highs.
Sure.
So price is always doing one of two things. It's either searching for liquidity, right, which would be up here.
Yep.
Or it's trying to fill an imbalance, which is doing right here.
Yep.
Okay. So the way I'm thinking about it is we've got the macro backdrop for it, right? We've got quad 4 in our favor. We've got the treasury thing going on to where people aren't buying our treasuries. They're looking for an alternative to get out of the dollar. Whether or not it's going to happen or not, they're starting to look for it. So it doesn't matter. I mean, other countries are looking for a way to, have some kind of reserve currency that's not going to be weaponized by an administration. So, you've got that whole backdrop telling you that, hey, we're probably going to see higher prices here, and gold's attractive for many reasons. So that gives me the comfort to say, hey, I know what direction we're going. Now I just got to wait for, the daily or the technicals to confirm, essentially. So, and, I've been posting this every day on Twitter for a while. People are probably sick of me, but, I look at daily and 4-hour zones for a couple of reasons. And it's because daily in your 4-hour zones are going to be your most important zones. They're going to tell you where your direction is going to go. And they're going to tell you, for instance, you see how, price came into this demand zone here. Right? So in March 08, the 8th of March, that's when oil peaked as well.
Yeah. So
oil and gold both peaked on the same day, which kind of drove me for a loop because I thought that, if oil tanks, then gold may tank. But of course, it's not exactly the same thing. So just noticing whenever price comes into this area, if you go down to a lower time frame, I'm seeing, rejections of this area. Boom, price is lifting off from these demand zones. It's showing me the character of where it wants to go, right? Whenever price dips down into these areas and I get an immediate rejection or a reaction, that lets me know that, hey, buyers are here, and, if price were to do something like this to where after it broke here and it came and it touched these areas and kind of broke down a little further and broke down and started acting like this, then I would have said, okay, well, I'm probably going to get out of this trade. But since the character of the stock or the character of the asset class agreed with, what I thought, we leave it alone.
So, so when it touched back, so out of curiosity, so when it came down, so that first, inside that first band, right? So like around the 14th, 15th there. Yeah. What were you, get two questions. One is, how big was your sizing? And two, did you act there or did you wait for it to confirm again?
Oh yeah. So let me show you. Whenever price gets to these areas, I'm acting immediately.
Okay.
So when price gets to these demand areas, I'm automatically putting in an order. Like whenever it hits, boom.
Got it.
If it's a fresh order, if it's a fresh demand zone, if it's, nothing's touched it yet, I'm putting in an order right there. And if you go back and look on my Twitter, I actually said that I was doing this. I should have took profit, but I'll show you what I'm looking for as well. Right. So when price,
and then hold on, just before you move on, and gold's low into the risk range on the 15th, which is that day, I believe, was 1911. So again, I mean, it's interesting because it's basically right there, right? So I mean, you're 1911. I mean, you're
yeah, it's interesting to see how many confluences that my strategy has with Keith. It really is, because I noticed that about a year ago, I was like, man, wherever my zones are, usually that's where Keith's risk ranges are.
Right. Kind of like
there's a variance. I mean, it's not always.
No, of course. I mean, yeah, exactly. It's not perfect, but again, just to have that back up what you're seeing, right? So like some of the work that you're doing on the side, or like to help execute your execution, to have that be backed up by also the risk ranges. I mean, you're merging the two together, right? So it's it's quite unique, right? And because again, like I don't have my stuff pulled up, but I can almost guarantee you that I was also executing on the 15th of March, right? Like, but I wasn't looking at I wasn't looking at it from a technical aspect. I was looking at it from kind of like a fractal risk range standpoint, right?
Of course.
And if it wasn't the 15th, it was the next day, because it confirmed price even more, right? Again, I don't really know when I did it, but it was certainly, I mean, I was definitely looking at pulling the trigger right around the same zone, which is awesome. So so keep going. So so as soon as it ticks down there, you're hitting you've got a limit order in, basically.
Yeah, and I like that. I like to see that I'm in line with Keith. I really do. I respect the hell out of Keith, and I understand this cat daddy here is a pro. All right.
Yeah.
And now, taking that being said, I will also not do everything he says because I need to see it for myself.
Sure.
So
and Chase, I mean, you need to say that one more time, because I try to repeat that all the time, and it's so important. It's like, Keith is his own man, right? He's seeing things his own way, and you're allowed to be your own person, right? You should be your own person, because you got to build your own concept and process alongside of the tools that are provided by Hedgeye and Keith and whomever else, right? And I think it's absolutely critical.
I agree. I mean, people heard horror stories of people taking people's advice. I'm not saying that would happen to you. What I'm saying is the principle of, going with your own opinion and finding out for yourself. I think, man, I mean, like you said, Keith has back tested his whole process. So he is comfortable. He understands why he's doing what he's doing, but you haven't done the work. So you're not going to really understand the depth of how, he built it. So you're not going to be able to understand, because you didn't build it. You don't really understand the inner workings and how, even though we do understand it the way he explains it to us.
Correct.
You're not going to really be able to understand the depth and the little nicks and knacks of what he means and why he's doing certain things. Like, like we were talking about, it's good to have guidelines, not rules, right?
Yep.
So, all
right. So getting back, so it confirmed as you kind of go through really the last week and a half. So like, how did you keep?
So what I'm looking at.
What did you see that? So again, I mean, you just mentioned basically is if it had done like the up, down, and then kind of confirmation lower, you would have certainly hit the pause button, right? So when you're seeing this in real time, what you said you hit a quarter. So I'm assuming that's like 25 bips.
Yep.
So you're hitting 20. So you're hitting 25 basis points of a position. And then, are you also putting in a stop then? Okay.
Yeah, I use a manual stop.
Okay.
I mean, people, you need to do what you're comfortable with. I mean, if you're gonna use a static stop, just know that the market whipsaw. It can whipsaw you. So
exactly.
You might be right, and price might go your way, but stop's gonna get you out. So
completely.
Play with it and see how everybody is unique. But so as soon as price hits this level, I'm putting in a quarter. Boom.
Okay.
Put in a quarter. All right. Now I want to see how it acts on these levels, right? I see some rejection. I see some wicks. Yep. All right. Now, what I really want to see, and this is just for me personally, is I want to see something come down, and then I want to see a break of structure.
Got it.
Like boom, and then I'll be looking to get in there. So something relatively.
No, so sorry. So on that circle, will you ever get a little bit bigger than the 25 bips, or will you just have? Yeah. Okay.
That's where
that's like
drop that. Yeah.
Okay.
That's my most preferred setup.
Okay.
Like that's exactly what I want to see whenever I'll get into a trade. Is I want to see a break of structure, price showing me that, hey, there's definitely, see if we get it.
Bingo. Yep. Got it.
Right. So we got a break of structure.
Yep.
Notice I said, I'm not using a manual stop here either.
Right. Because so again, like in that moment in time, you're once again waiting for price to confirm, basically, right? So like it'll if it did that, if rather than popping up back up to like 1922, if it just kept confirming going to 1890, you probably would have stopped yourself out, right?
That's right. So you see how this whole thing I have circled, I'm still a quarter, I'm still 25 bips right here.
Right. Okay.
I haven't added at all.
Perfect.
My next confirmation would be this.
Right.
Would be my market structure break. Right.
Sure. Yep.
So once that happens, boom. All right. You see, that shows me that we have buyers.
Yep.
Boom. I'm adding another one.
Perfect.
Okay.
Yep.
So after that, I'm going to be looking for something like a pullback. I'm going to be looking for some price to go up here, get everybody to chase. And I want something coming down here, and I'll look to add again right by my cost basis.
Okay.
And that's what I'm thinking. So it's really important to watch these lower time frames whenever you're getting into a trade, because the lower time frame will switch the higher time frame.
Of course.
Right? People need to listen to that. People think that higher time frame is the answer to everything, which it is more powerful, but the lower time frame can change and switch the higher time frame.
Right. Well, because it'll. I mean, it's the leader. It leads the higher time frame, right? So
right. That's right.
Yeah.
That's right. So I mean, just to notice. I mean, it's important to watch both.
Yeah.
So we get a little bullish action. All right. You see how price came back to this area?
Yep.
That little 1 hour candle.
Yep.
All right. I'm adding here. So now, Robbie, I'm 75 basis points in.
Sure.
So almost a full position.
Yep.
Now you see how I've scaled in though? They're all by my cost basis.
Yep. Because the price is confirming.
That's right, because price is confirming.
Yeah.
So what happens after this? Goes down a little bit, get a little reaction. Right, holds these levels.
Yep.
I haven't added any more.
Yep.
Let's see. So we got a little higher.
Yeah.
Right. Whenever price would have got to this high, I probably would have chopped some off.
Okay.
Chopped a little off right here.
Right, because again, you're with the price action you're seeing, you're like, okay, I'm expecting it to be in a bit of a band here, basically.
Yeah, what I was expecting whenever I first got into this trade was we were going to get like a little, go to the higher time. We were going to get like a little pop and then a retracement and to continue going. But
for sure,
as you see, you can have a plan, but
right, but it doesn't always come together. Yeah.
So notice whenever, like on the lower time frame, this is why I watch the lower time frame, is because, So whenever like this structure break happened, I put a tweet about it. I was like, all right, look, I'm starting to see lower prices for precious metals. Now I didn't trim any of my position though, because I haven't, this whole thing is my area. This whole area is, where I'm holding. This is where my cost basis is. So as long as price doesn't go below here or show me that it's going to go below there, then I'm still holding strong.
Sure.
So
And again, just like, and I mean, this is about you, Chase, but like, I was of similar mentality, right? So I mean, I had probably going into that first drop there, like where you kind of added, I think I'd taken it down to, I'd taken it definitely down to my min. So it was down around probably 4 or 5%, right? So, and that's where I took my first stab at it, in terms, pretty much almost exactly where you did, as I said, like on the 15th ish, and then every kind of, not every pullback, but certainly I had some limit orders in that basically very similar band, right? And so I'm playing it through GLD, but it was it was around, call it 177, right? 177, 178, in that band was when I got interested, basically, right? Is when I was adding more, and yeah, so perfect. So this was starting to confirm, and to me it was like, again, just salivating over the fact that you're getting all these opportunities, and but the price of gold, the underlying, was acting so well. Like, again, like to your point, it was holding kind of above 1900, really. At the end of the day, it was kind of like that level, right?
Support zone was there, yeah.
Yeah, the core zone was there. So perfect. Okay, so keep rolling, because this is awesome. I think folks are going to really love this.
Good. This is an inside look.
Yep.
So look, I want you to look at this. We got a 4-hour demand right here. See that guy? Whenever you see a demand zone, or whenever you see a supply zone, I want you to look for two things. I want you to look for 3 candles. You see how I got 3 red candles here? Boom, boom, boom.
Mm-hmm.
That shows me this right here. This green candle is a supply zone.
Sure.
It's the same way.
On the flip side, right?
On the vice versa. That's right.
Yeah. Yeah.
So for instance, you see how I got 3 green candles right here?
All
right.
That means that red one is a buy zone or demand.
Right.
Yeah.
That's right. So, man, I'm telling you guys, if y'all just go through these charts and back test this, you will see this play out over and over again. And I'll tell you why it works, because you can't fake price action.
Sure.
You know what I mean? You can manipulate it, but you can't fake it.
No.
So moving on, I knew at this point that we were going to see lower prices, because we had a lower time market structure break.
Yeah. Yeah.
So I knew that we were going to see lower prices. At that point in time, I'm looking, I'm saying,
because again, like on the smaller, so again, like just on terms of what you just said, you've got a supply zone there, right? Because you just got 3 red candles. So on a smaller time frame, you've got a supply zone kind of within the buy zone, right? Or so
look,
yeah.
Look, let's find it. Look, you see here, that's your supply zone within the supply zone.
Yeah,
yeah. And then you got what here? You got your buy zone within the buy zone. So you see that?
Yeah.
So, like I said, bro, Keith's right. It's all fractal.
Yeah.
Life is fractal. The question is, how do we make it profitable?
Exactly. Awesome.
Right. So you gotta know what. Like, for instance, okay, whenever I saw price going down, I was like, okay, you know how we talked about the consolidation? I said, some people need to get taken out. So I looked at this low right here.
Yeah.
This guy, I know it's kind of messy around here, but I looked at that guy and I'm thinking to myself, all right, these guys need to be taken out. Some people need to be faked out.
Yep.
What does price do? Goes below. Let me just delete this for a second.
No, you're good. I know. Yeah.
Okay, so what does the price do? It goes below these lows and then gives you what? Boom, a wick.
Yep.
Isn't it funny? Isn't it funny how a low will get taken out right here and then price will shoot up? It's because all these people right here that got taken out, all their stops got hit bid.
Right.
Right. So now there's an imbalance. All right. You see how we broke market structure here?
Yeah.
Boom. It shows me, okay, buyers are in play. You got demand right there.
Yep.
What is that? More demand right here. Boom. Yep. You got another structure.
And it just keeps reconfirming itself too. Yeah.
That's right. You see how it gives me another structure break and then gives me more demand?
Yeah.
Keep going. You see?
Yep.
These levels will get blown through if you're not on the right side. If we're not on the right side, this will just get cut through like butter.
Right.
All these demand zones, if you're not on the right side, they're going to get used. You're going to be used for liquidity.
Yeah. And that's where, and that's sometime, right? So like in my own process, it's like if I see that price basically on that like Tuesday, right? So the 29th, what have you, right? So it kind of confirmed, it confirmed, or it had that wick down, and then it kind of reconfirmed. Right, yeah, that one right there, right? So like that was the 29th, I think it was. So I was a buyer. I remember I was like a buyer on that day. Again, it was like well below the low end of the risk range, and just given the markets, like just given our outlook, to me it was obviously a great opportunity. And so
you bottom ticked it, Robbie.
Oh, absolutely. Yeah. So it was great. But the thing is though, it's something that I've learned over my 2 years at Hedgeye is that basically it's exactly what you just walked through, but it's the reconfirmation, right? So if it had broken down through that kind of like, again, like that 1920 or really the 1900 zone again, that's when I would have gotten concerned, and I would have basically just almost stopped myself out and just taken probably a small profit and or some losses from when I added earlier, the couple of weeks prior, and I would have brought it back down from kind of at that point. I think I took it to just north of mid, so I was probably about 8 or 9%, and I would have brought that back down to certainly my mid, right? Because I think, again, just from a risk management standpoint, it's really important to have those setups and that process in place, because otherwise, you mentioned this before, Chase, like you then become the supply basically, right? And you become the one that gets stopped. You become the one that gets stopped out.
That's
and
right.
Yeah, and so it was this is a great walkthrough. So yeah, perfect. So now when you saw that wick on the 29th, I'm assuming from what you've told me so far is that you probably waited until that like second red candle, right? On the like or in early April, in terms of like kind of adding back, or were you waiting for the green confirmation out of curiosity?
So this guy right here,
yeah,
what I was looking for was, this is where
that's
you
that
added.
day. Yep,
that's the day. What I'm looking for to add again is because remember, all this was the daily low over here.
Right.
So I was looking for lows to get taken out. I was looking for this low and this low to get taken out. Right?
Perfect. Yep.
Now after we saw that, then I was looking for this market structure break.
Got it.
So once I saw this, I said, oh boy. Now we can go back to our regular program. I started adding. Right?
Yeah.
Now every single one of these, is just 25 bips. Right. I only got 4 of them. So I mean, I'm a fool. I'm 2 feet deep in gold right now, and it's because I got all my cost basis around here.
Sure.
You know what I'm saying? All this right here.
Yeah. You basically just kept so I mean, to summarize, you basically just kept having price reconfirm your cost basis, basically. I mean, again, like I'm summarizing, but you're basically you just let over the course of a month or 3 weeks, you let that like 1920 level just continue to reconfirm itself.
Basically, because look, so I know, and a lot of people don't understand that right, price is non-linear. Price doesn't move on bar time. Price doesn't move on human time. It moves whenever it wants, and sometimes it'll take, weeks. So
completely.
What I noticed is that so I went to the weekly, and I said, man, this is the setup I'm trading, because what is this, Robbie?
Yeah,
This is this guy. What is this guy right here?
That's your buy zone again.
Right, that's the demand.
Yeah.
So I'm looking on the weekly time frame, and I'm saying, hey, if I'm finding this setup on the weekly time frame, then it's going to take weeks to play out.
Right.
Yeah, because we're looking. I mean, the weekly and the monthly are where the big boys are at.
Yeah.
So we want to be in line with them. And I'm just looking at this whole thing, and I'm saying, okay, we need to be patient, because once gold takes off, it's not gonna, like, you're not gonna have chances to come back in. You know what I mean? Like, for instance, this thing went up for how long? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. So 2 months straight, you didn't get a chance to buy back.
I hadn't really thought about it in that regard. I mean, obviously you see it, and on Wednesday's notebook review. So again, Chase, I'm not sure when this is going to get released, but I have a feeling it's going to be sooner than later. But basically, this is Master Sunday today. So the notebook review on Wednesday, there's a solid 25-30 minute chunk of it about XLU and how it ran away from folks, right? And do you chase it? And obviously, again, we're now looking at gold, and Chris and I on Friday's session, we kind of reviewed it in a little bit in terms of timing and sizing and when to go about it. And so this is a perfect example of kind of tying back into that conversation, which was back in 2020, you had 9 weeks where gold just ran away from you, and
that's right.
In 2022 you had basically 5 weeks, 6 weeks there with one little opportunity to buy, right? You had 1, 2, 3, it's 6 weeks, right? Yeah, right in there, right? So you had exactly, but it, again, it shot right, shot up on you, and so this is again, and I've certainly been using the last, as I, again, not to belabor about me, but certainly the last 3 to 4 weeks has been the spot to like gross back up in gold to your max, whatever that is for you, right? Whether that's 4%, 8%, 12%, right? Like to 24%, it doesn't really matter, but like whatever is your max, you had opportunities throughout the last 3 weeks to get there. And again, we're certainly expecting it to I'm certainly expecting it to go back up to hopefully blow, in the ideal world, it blows through 2100 there, or whatever that, whatever that top end is. And we really get paid, right, Chase?
Yeah. I mean, that's the ideal. That's what we'd like to happen. I mean, I think it's going to go a lot higher than 2000. Man, I just, if what's really going on is really going on. For instance, if China is really buying oil and RMBs, and Russia's really selling gas and rubles, and people are looking to settle debts outside of the dollar, I mean, gold's going to skyrocket. That's just, even though we don't have enough gold maybe for a gold-backed, system. I just, what are people going to, I mean, even getting off of the dollar is going to take decades. It's going to take decades, like to unravel the whole global financial system that was globalism. I mean, it was ran from the dollar. And so the whole thing, I mean, how it's going to take decades for people to get off of dollar dominance. And I don't think people understand we don't understand what we're seeing right now. We don't, like, the stuff for blockchain, this technology that's coming out with cryptos. I don't think we really understand what all this technology is, because it's way too early. And I mean, gold is just going to be a proxy to finding the next reserve in my mind.
Hey, so we had a little interruption by my little daughter, so sorry about that, Chase. But Chris is getting in. I can't wait for those last commentary about the gold, and I mean, Chris is going to love that gold bug talk. So you guys are
I
both
bet he
basically,
is.
you guys are both basically reformed. Well, I don't know how reformed you are, Chase, but he certainly will call himself a reformed gold bug. But I think just like anything in life, once you are a gold bug, you're always a gold bug, right?
Oh man,
Just like when you're in the Marines, you're always a Marine, right? Or like
a little part of you believes it.
yeah, exactly.
That's what it is. A little part
I
of you
love
kind
it.
of wants it to happen.
Yeah, exactly. Oh man, this has been a great education, Chase. So I'm so grateful for you to sit down. I'm really glad that we got more into the weeds, because I think folks are going to absolutely love this. I think this is a great way to finish up, and to have it on the gold right now. I think it's so it's just
Fitting.
it's very fitting. Exactly. So no, this was that was fantastic. So really appreciate it. And yeah, no, I think talk about hitting a home run on the first repeat guest, right? You just absolutely crushed it there, bud. So thank you.
Well, we'll see how everybody likes it.
Awesome.